Oh my lordy, good morning everybody. Happy Monday. It is Monday. We are back in action here at the morning show on Stock Market TV. Hope you all had a great weekend. Hope you're well rested, ready to go. A lot to discuss today. Of course, if you watched on Friday, you know that one JC Parets is doing some real-time channel checks for us, some due diligence on the ground in Disney World. We sent him there for that. So he's out today, but we do have one Patrick Donawilla in his stead. So excited for that. Pat, Steve, myself, we have us, we have you. You're ready? Let's go. Good morning, people.
What's up, everybody?
Hey, happy Monday.
How are you, Patrick? How was everybody's weekend?
It was a good weekend. It's a little early for me here, but we're powering through it. Good start to the week, you know.
Nothing like a 5 a.m. wake up.
Well, hey, I'm happy to be here. Big shoes to fill today, but, you know, wouldn't want to be with anybody else. You two fellas talking about markets. What's not to like?
So I had a lovely weekend. Got to hang out with my good pal, Blake Millard.
Oh.
Sandbox. We golfed on Saturday, hung out yesterday downtown. It's nice. It's nice when I have a friend in town. So good stuff. I golfed Saturday and Sunday. So it was a perfect weekend for me.
Not many friends in Key West.
So, yeah, not really. Also, the average age here, it just makes it tough. You know?
Yeah, I bet.
I'm well below the average, and I'm not that young. So it's going to be the Strazza show this week, Monday through Thursday. Joined here with my esteemed guest co-host and pal, Patrick Donawilla. Pat.
I'm excited.
Love seeing you this early in the morning. It's dark out through the windows in San Diego.
It'll be light before the end of the show. But, man, we got a lot to talk about. A lot happened last week.
Should we say
a lot happening over the weekend, man? A lot happening this morning.
True.
So, do you want to hit on this Oxy news quick, Spencer, and then we'll jump in and do a little state of the markets?
Yeah, we can do that if you want. So this is sort of the, I guess you could say it's the big news in the morning. Remember last week when I said, M&A and biotech, maybe not so much in energy. Well, not so fast to that comment. We got another M&A deal announced this morning in the energy land, energy space, energy complex, whatever you want to call it. Occidental Petroleum going after, they're taking over. It's a private company, so there's really no trade to be had here if you're one of these M&A traders, but they're buying Crown Rock for about $12 billion is what the deal is valued at. And while they're doing that, they're also raising their dividend from 18 cents to 22 cents per share. So another big acquisition happening in energy. It's like the fourth or fifth big one this year. So.
Yeah. So they announced the dividend with this news. That's interesting, though.
Yep.
Oh, okay. So, yeah, I think they're hitting up the debt market for like $8 billion, $9 billion. So
here's an Oxy chart. Yeah.
Toss them back to shareholders. Throw up. Let me see. Which one did you put up here?
Yeah, I'm curious to hear this Buffett news and Oxy, because I was looking at this chart over the weekend. It's right there. At that Buffett zone. So call it the Buffett floor, whatever you want.
So throw up slide 10. You don't want these to end up being tops, right? Merger news aside, that's great. How much is the stock down on the news this morning here?
Well, it's actually it's off the lows, but it's down about 80 cents.
Okay. So not going to be the catalyst to complete this top. I think that's good. For anybody who's bullish energy over any short or intermediate term time frame, you can't see these tops go, right? If you look at gasoline, RB futures, not good either, right? Flirting with these new lows. You want to see that hook higher. You don't want to see these tops complete. That would suggest or indicate worse corrective action, more downside, maybe even potentially a new bear market for energy. If you look at Chevron, if you look at Exxon, if you look at crude oil or gasoline, all look similar with these toppy tops.
Yeah, you're not wrong.
They can't go, right? That would be very bad for energy bulls. If they hang on here, right? We talk about it all the time. The best tops are the failed tops, right? So that's very much in play. Maybe these end up failing, and that would be big. And maybe that would suggest, okay, it's time for energy now. I don't know. I think we got to kind of wait and see. But these are really worth monitoring here. We talk about Oxy, like Pat's saying, being in the Buffett zone. Well, the Buffett zone is also the breakdown level of that top, right? So
totally. I mean, he basically created that support level, right? And if it doesn't hold, a lot of people's thesis is just blown out of the water, right?
I think he might be done. I think he might pretty much have the position that he's allowed based on what FICC approved, that 50% of outstanding shares.
We'll have to look up. I can do it quickly here. The dates of his purchases, right?
What do you mean? Why?
Because I just wonder what the longest gap was in between.
That's a good question. I think, what was the last one? Like June, May?
Fonz, drop in the table and we'll hit your state of the markets. We have all that information. Drop in the table, Fonz, even if it's not updated, but I think it should be updated for all the purchases, and we'll run through them. Hit the state of the markets bumper. Let's talk about some charts real quick. Okay, look, it's been tech. It's been all about tech, right? The leaders keep leading. Having this conversation yesterday. What a chase we're seeing into year end. A lot of us talked about this chase potentially going down in September and October. We got it in a big way. The leaders are really, you're seeing them really, some of them accelerate higher in terms of outperformance, okay? But, however, everyone keeps talking about this rotation that must be coming. I think it probably starts in January once the window dressing is done, right? They got to get those December statements out, those year-end statements out. It's probably going to stay in the leaders. Is there going to be some sort of big shift or big profit-taking move, right? And a shift into value and other less leadership groups and stocks? Maybe. How will we know? I think these charts will tell you, okay? All of these, we're going to look through 3 of these ratios. They all speak to growth versus value, or really mega cap tech and the best stocks leading. Okay, so first, equal weight technology versus the S&P 500. We've been here before. This is a massive 3-year range. And we're going to see one of 2 things from all these ratios. Either a sustained breakout and even more leadership and an acceleration in outperformance from the biggest and best stocks, right, or the tech stocks, or they're going to fail at these former highs. We're going to end up circling this with a red circle and saying, oops, right? And we're back in the box, back in this old range, and maybe even head back towards those range lows. That's an environment where participation really broadens out. Value probably starts outperforming, right? And they're all going to move together. So show the next one now. Same thing. NASDAQ 100 versus S&P 500. Again, if the biggest, best stocks, the ones that drive the NASDAQ 100, continue to outperform the broader market in a big way, this thing's going to break out. And if and when it does, we need to lean on those areas that have already been leading and working the best even more. A lot of people seem to think that the odds of that happening are very low. What I'll say is if you zoom out on any of these charts, the underlying trend coming into this consolidation was up, right? So we shouldn't be surprised at all if these consolidations resolve higher and that leadership continues. We have to remain open to it, okay? Next chart. I think come January, we'll probably have a good answer. Do we have the next one? The growth versus value. Same thing, right? So do we enter a world where we start talking more about financials, industrials? Maybe those tops in energy aren't tops, right? They are failed tops, and energy starts leading again. Materials. But it's not just the value groups. Next chart. It's also not the defensive groups. Okay, so it's not going to be the defensives. New lows here, low volatility and staples. This is classic bull market behavior, right? Seeing the most defensive, most risk-off groups. Nobody wants them.
Wait, so what? I'm confused. What can it be if it's not value and it's not defensives? What else is there?
Next chart. Next chart.
Here we go.
So that risk appetite is really ticking up. This is all coin index. Skip
this is not.
All roads lead to crypto.
But it's the point. It's gonna be the speculative stuff. Give me the ARK W. These are some of the most risk-on, most offensive, non-profitable tech, long duration growth, the ARK stuff. Look at that base. Pat, is this perfect?
Yeah, I mean that's the best performing ARK ETF this year. Not surprising, right? But you know what? It's got a lot of it's got Coinbase in there, GBTC. It's very exposed to Bitcoin.
Mm-hmm. That's why it looks like that altcoin index that we just showed. That's why I showed them back to back.
Okay.
Next chart is really going to make the point I'm trying to make. It can be rotation out of big tech and into other tech. That could be the rotation, right? It could be something where you see these speculative techs take leadership, which would be very bullish, classic bull market stuff, and maybe some value groups participate too. It could be both, is my point. Just to say, ooh, that growth versus value ratio is rolling over. Let's get out of growth and into value. No, that's first level thinking. Okay, it's not throw out all your growth stocks. It's maybe rotate into other growth stocks that were less loved and didn't perform as well. Maybe now it's their time to kind of take those leadership reins. Okay. Next chart. Also, though, don't sleep on something like banks or some of this value stuff because we're seeing similar reversals there. You could draw this one up the same way. A nice base in the banks relative to the broader market. I don't know if I brought along the XLF chart, but the point remains, don't look at growth versus value, in a tunnel. Okay. It's not, okay, we're out of growth and full into value. No, a lot of these growth versus value relationships and ratios people are constantly posting charts of are really just talking about like the Magnificent Seven and the biggest, heaviest weighted growth stocks, right? And if we get rotation out of them, doesn't mean that the entire, growth dynamic or growth factor is something you want to stay away from. You might just want to go down the cap scale or further out on the risk spectrum and pick other growth stocks, right? So it's not growth or value. It could be growth or different growth is the point I'm trying to make. What do you think? Hot take, not so hot take?
I mean, you're not saying that the idea of separating growth versus value is irrelevant. You're just saying it's not the actionable idea right now, right? I think that's what you're saying.
It's a lot of these growth versus value relationships, or even the NASDAQ 100 SPY, they're really just being driven by the biggest tech stocks, right? But there are other tech stocks and there are other growth stocks, and maybe rotation.
All right, okay.
Ones, it's not about growth. It's just maybe those leaders aren't where you want to be anymore. And the growth versus value ratio might suggest that you want to be in value, but there's other growth stocks, right, that don't really move that ratio at all. ARK stocks aren't moving NASDAQ versus.
You're just saying it's not. You're just saying it's not relevant. It's not relevant right now.
It's
okay.
Don't look at it as a situation as I have to be overweight growth or value. And if it's not growth, it's value. No, if it's not growth, maybe it's just not these growth stocks. Maybe it's these other growth stocks is what I'm saying. I think we get that. And that's bull market rotation, right? Down the cap scale, smaller stocks, more speculative stocks, more risk on groups. And you'll just see it move into other growth stocks. It doesn't have to be some big move into financials, industrials, energy, materials. I think the evidence is suggesting more that's going to be rotation into other growth stocks.
I like that. Basically, not so black and white. Kind of dig in a little further. Yeah.
What else?
I'm for it. Sure. I mean, it's a good idea. It's a good idea. The logic is sound.
Spencer's like, what about Disney? All right, throw up 11, Spencer.
Not what I'm thinking.
Bonds has your answer. So this is a sweet little table that we do, and I think the answer to your question would be this is the longest period. Since June now. June was the last purchase.
Okay, now.
And I really think they might be done. And that's it.
So he went.
Is there
3
talk that he was trying to acquire it? Was that the plan, or
No,
just
no.
he
Never.
just likes the
He doesn't
company?
want it. He's actually come out and said he doesn't want it. He loves the
Interesting.
management team. He wants them to run the company. He just wants to own a big chunk of it. But he doesn't want to own the whole company. Came right out and said that quarters ago. So that's it. And then you have to look back to that top that shows the Buffett zone and ask yourself, if he's done buying, is there support there still?
Right.
We're finding out. Listen, if Oxy can dig in here and rebound off this level again without Uncle Warren coming out and throwing millions, tens of millions of dollars into the mix, then I think that would be big, right? So let's wait and see. I think we find out a lot about energy stocks this week, next week, because if they're going to go, and by go I mean break lower, probably happening pretty soon. Again, look at Chevron, look at Exxon, like all of these tops, they're right there. Do they hold or do they break? I think we know pretty soon.
And of course, the irony of people following Buffett into this trade is that, of course, Berkshire Hathaway is buying stocks. They're buying positions that are going to outlive Warren Buffett, right? That's what they do. But like, how many people have the tolerance to wait as long as Berkshire, right? Not many, right?
Yeah, right.
So
the comments in the chat last week continue to baffle me about how Warren Buffett trades stocks. Don't be confused about how this works.
I mean, they trim, they add and they trim every quarter.
They're not. It's not trading. It's just that they're managing their portfolio.
Yeah.
They're long-term investors, the longest term investors that we know, literally. Oh, I don't know.
What about Masayoshi Son? Isn't his holding period? Didn't he say it's like 300 years or something like that?
Yeah, I think I remember that.
Well,
yeah. That's a different kind of
idiot. And Wavy, we will get to Blackstone Minerals, and I'll remind you why we are not buying charts that look like that. It's been the right thing to do all year. So we continue to be right, staying away from Blackstone. All right, let's move on now. Let's hit me with some news, baby.
Oh, we got news, or do we got news? Let's see what's moving here. All right, we'll start with Macy's here. We'll stick with the M&A theme. This one maybe do a double take myself over the weekend. Also, somewhat unusual for news like this to break on like a Saturday. But
yeah. Is it PE? What is it? What's happening?
Yeah. Macy's has an offer to be taken private by two private equity groups that already have large stakes in the company. It's ARK Management and Brigade Capital. It would be a $5.8 billion buyout. It would value Macy's at $21 per share, which last I checked this morning, it was sniffing that.
But it's not a done deal.
Oh, well, now it's at 19. So pre-market, 6 a.m. is one thing, 8:50 is quite another. But yeah, it's not a done deal.
Okay. So for now, it just kind of leaked out that they're in talks.
Yeah.
Is that right?
Exactly. Yep.
So interestingly enough, right, because this is something that you would only know if you're an SEC nerd. The SEC there's been a movement at the agency to shut down sympathy insider trading. And it's mostly with the biotechs, but it's a big problem. So what does it mean to sympathy insider trade? You have non-public material information about, let's say, Lilly and their GLP-1 drug. But instead of trading Lilly, you trade Novo Nordisk.
Sure.
Right? Gray area. You had non-public information. You trade the other because you know it's going to move in sympathy. It's something that the SEC has done a really, really good job at, which I won't say very often. They've done a great job at kind of shutting this down. We saw crazy bullish call flow in Nordstrom on Friday. And I can't help but wonder. Oh, I've never seen options.
Well, if you look at what's up this morning, 5% Nordstrom, 5% Kohl's.
Mm-hmm. So that's exactly what that sympathy insider trading is, and I wonder if the SEC has some digging to do into the market depth or trade blotter and see kind of who that was being so overly bullish and active in these JWN calls on Friday.
It's a very interesting question, right? Because, and I think we've discussed this once or twice on the show, because it's not really insider trading when you're trading a different stock, but the way the market works, it sort of functions as insider trading in a way. But it is an interesting loophole. It's a loophole. It's what it is.
Yep.
I don't know. I'm very interested in this legal. I'm no lawyer, but I'm very interested in this legal argument here, because I can understand. I sort of get both sides. I totally get both sides of this one. You know what I mean?
And listen, they'll find a new loophole when they shut this one down. And that's just as markets evolve. You find one loophole and the agency or regulator shuts it down. They find a new loophole, and there'll be more things that happen in the future like this. But this is a pretty interesting one, pretty fascinating idea to think you can skirt insider trading violations by trading in a security that will move in sympathy to the one that you have information about.
Yeah. Can we pull up that Macy's chart? So this appears, or at least could be, the end of the line here for Macy's. Patrick, is there an earthquake? Are you okay?
No, it's just my computer shaking.
Okay. So yeah, the long, slow, painful death of Macy's as a public company, could be over here. All-time high, $73 back in 2015. Right when I started paying attention to the markets, that was or just after that. It was, but yeah.
If Macy's goes bankrupt, what happens to the Macy's Day Parade?
No. The thing about Macy's is, like,
they're not going.
They're still relevant because of the parade, and like because of the windows in New York City every year at Christmas, and it's like. And also, Wavy's saying they're doing this deal for the real estate. I thought Macy's had already sold their real estate. I thought
it's not for the real estate. It's not worth anything anyway. These spots at malls and shit that they have.
There was a
strategic partnership because they have a huge store footprint, right? Amazon did this with Whole Foods, right?
Extremely well.
There's something strategic there where think of it as list sharing, right? They have a huge audience. They have a giant footprint all around the country. That could be very valuable to somebody who's in a very different business. What that business is, we don't know, but that's what I would guess. So
Peter in the chat said it becomes the Amazon Day Parade.
Maybe. But I do think, Spencer, I tend to agree with you. I think if they were going, they would have gone already. They've really hung in there through COVID, through recessions. We've seen Sears, crash and burn, and plenty of other retailers fall to the wayside. I think Macy's has staying power, and there's some serious brand value there, for sure. So
yeah,
there have been retailers that kind of managed to survive, and like to my surprise, like Best Buy, Barnes and Noble. I mean, plenty of competitors were lost before they ultimately kind of found their footing.
I mean,
how is Barnes & Noble still around? I still see
TJX is at all-time highs. I'm not quite sure how they're doing it.
TJ Maxx is just a special store, though.
I'm not quite sure what's going on over there. But look, I feel obligated to mention that I once upon a time worked at Macy's in receiving. It was depressing then, and that was over a decade ago. I'm sure it's more depressing now. It was a shell of itself when I worked there, and that was a long time ago, more than a decade. So I can't even imagine.
Did you watch the John Oliver about the Dollar Tree stores?
I did. Thought I watched it with my wife. I thought she would enjoy it because my wife loves the dollar store, and I thought, and she
made her sad, probably.
No, she was bored. She didn't care.
Wait, I missed that. What was his take?
That essentially that they're awful businesses in the sense that their inventory management is abysmal. They pay their employee. They operate stores with one employee to operate the whole store.
I definitely believe that.
One employee in the whole store. You wonder how everything's so goddamn cheap.
I feel like that's like a security risk at that point.
No,
it is. And it talks all about that. These stores get robbed a lot in these rural South North Carolina areas. It's not good.
It's speaking of dollars, I think I saw a headline late last week that I think it was Dollar General they said that they had leaned too hard into automated checkouts and that they are going back. They're going to hire more people at the registers, which great, man. I used to live near a Dollar Tree, and there was forever a 15-minute wait to get out of there because there's one person every time I needed something. But anyway,
the line is always like 6 people deep.
Oh yeah, at least
in the store. That's how long the line is.
Yeah.
Okay. Great.
Yeah. Okay. So Macy's, and then of course we have, like we said, Kohl's and Nordstrom's up in sympathy with that. Let's talk about a death march. Holy moly. Okay, what else did I have here? The other week we mentioned Humana and Cigna attempting a merger. That is off the board. That is no more. The companies called it off over the weekend. Instead, Cigna is going to do a couple of smaller acquisitions, and they also announced a $10 billion buyback. So there we go. Oh, look at the chart. So Cigna and Humana they were trying to merge and compete with like the CVS and Aetna combo and the UNH behemoth, and that's not going to happen now. Even though I guess there was some concern. I guess there were thoughts that it could go through. It didn't appear that shareholders were super enthusiastic about it. So that's why both of these stocks are up this morning, is because their merger is no more.
And then these overseas online retailers, tough day. C Limited, which I am no longer long, thank God, down 12%. TikTok to spend 1.5 billion taking over GoTo's Indonesia shop. I don't know.
Yeah.
One of their subsidiaries or brands. They're huge in Southeast Asia. And then JD.com finally booted from the NASDAQ 100.
We'll get to that after our guest, because there's a lot to discuss there.
Okay, good. Yep, bring Jason on.
There's six going in, 6 coming out. So we'll talk about that after that. But let's bring on Jason Shapiro from the Credit Market Report, and he sent us a few charts as well. So let's see what he has to say.
Sweet.
Jay, we've been friends for a long time. Call.
I mean, this is pretty nice.
Nice you got going here.
Jason, how are you?
Good. How you guys doing?
Doing all right.
Welcome back.
Thanks.
The chat has been asking for you, my friend.
They have been. We've had
All right,
multiple.
I hope they caught my Macy's call.
Yeah, what was it?
I have it on Twitter here. On the day that they came out with earnings, now you got to understand, I know a guy who's a value investor that I'm pretty close with, and he's been buying Macy's all year and getting killed, which is the only reason I was ever watching it. And then my boy, Dan Nathan, who is my absolute favorite fade on the planet, he came out the day that Macy's had earnings. Macy's went up on their earnings and came off the highs. He said that was bad price action, and he had never mentioned Macy's in his life. And he said that was bad price action and that you have to press shorts on Macy's right here. That was at about, I think, 14 on Macy's about 3 or 4 weeks ago. And I called my buddy up. I said, dude, you're gold now. I know you've been hurting on this Macy's all year. You're gold. And I put it on Twitter. Hey, man, you got to buy Macy's here. Just based on that one thing alone. And meanwhile, a month later, the stocks are double.
Dan Nathan is really good at getting it wrong, huh?
He's really good at getting it wrong, yeah.
Bummer for him.
Which you can see in his approach, in his personality. It's just the perfect sort of thing.
I feel like those guys are all just sentiment chasers, right? I feel like they all just sort of,
I mean, Dan Nathan
buying the highs or selling the lows.
He's special. He's pretty special.
Okay.
Yeah.
Okay.
Yeah, whatever. I want to talk about traditional. I want to get into Bitcoin. So before you go, we'll finish with Bitcoin. I see what you're tweeting out here. I love this chart. But how about traditional markets? Are there any extreme positioning? Whether it's in S&P futures, dollar, anything that you're watching that stands out right now?
The metals are pretty extreme here. Gold, silver have people pretty extremely long here.
In what direction? So throw up chart 2, Fonz, micro silver futures.
Right. So to me, that's a perfect chart of what a trap long looks like. You can see the blue, which is really the large speculators, where they got mega long there right into the highs.
Okay. Yep.
And before they knew it, it's gone quite a bit against them. And now they're trapped. That's what a trap long is right there.
So what is the red? That's the commercials?
Yes.
Got it. So just explain, elevator pitch, how you're using this data. Who's the smart money? Who's the dumb money? What side do you want to be on?
So the way that I personally use it, And there's a number of ways, but I'm a turn picker. So to me, what happens at turns is the blue and the yellow, which are the large and small speculators, get mega long at the highs, which would have you the red with the commercials, which are the opposite, would be mega short. And you can just eyeball that chart. Look at the highs in silver in May, where the speculators were mega long. Same thing in July there. And then, same thing here. So I look for that. And then I start looking for the market to go the other way.
Do you find that this COT data works better for some markets than others? I think it's just been spot on for precious metals like my entire career. Almost at every turn, you could pull up the COT positioning and just show it, how commercials are on the right side. Are all markets that way? Do you find that it works better for some than others?
I don't think any of them work all the time.
Yep.
I think all this really does is help to get a risk reward in your favor type of thing. If they're super long, doesn't mean the market's going to turn, but it means should the market turn, you can get a very big move the other way. So therefore, your risk reward can be skewed in your favor.
Are you waiting for like confirmation from price? For example, say commercials are super long, but things, it's like catching a falling knife.
Yes. Yeah, you have to 100% wait for confirmation in price. Just like in any trade, I think you have to wait for confirmation in price. But with this as well, because you're right, commercials can be long and they can be long for a long time.
Yep.
Doesn't mean that the market's going to turn. You have to wait for the market to start telling you that it's turning. And then there's the possibility that you can get a squeeze and something like that.
And then how about for exiting these trades, right? I see how you're getting in, but what kind of, when you see the signal and you enter something, like what's the typical time frame? How do you know when the trade is over?
So for me, because of the way that I'm trading it, if my theory is, hey, they're super short here, so I'm going to get long, and that's why I'm getting in, then the reason I'm getting out is when they're not super short anymore. So essentially when this stuff goes neutral. And you could argue that I should wait all the way until they get super long and ride it all the way from super short to super long. But there's a few reasons why I don't personally do that. One, I found that after it goes past neutral, yes, there's more profit to be made, but the volatility goes up sharply from there. So that reduces my sharp type of thing. Yep. And also because that's not really my job. My job for my clients is I'm picking these turns. Once it gets to the point where they're out of their shorts, well, now the trend followers are getting long, and that's kind of the trend followers' job. So most of my clients are fund of funds. So they're putting me in for the negative correlation to those other people. So I don't want to be correlated to them.
You're a diversifier.
That's good.
Yeah. Wow.
Wait, Strazza, were you going to go? Sorry.
Yeah, I just want to talk about Bitcoin. So let's just go right there. On Twitter. What? Okay.
No, nothing. Wait, hold on, real fast before we do that. What was that other chart? What was it? We had two charts here. What was this one? This was the Dow.
That's the Dow. So
Okay.
figure if we're going to talk the stock market, you can see that the speculators were massively short, right, in the Dow, and you can see what's happened. They've got out of those shorts, right, as the market has squeezed higher. So for me, there's nothing left here, right? I wouldn't have a position on, nor do I have a position on. Doesn't mean the market can't go up, because let's say that now the speculators are going to go from super short to super long. That would, I would argue, push the market higher. It just means that for me, the risk reward is not there. It's just kind of neutral here. So there's no edge for me.
Okay.
So they had this extreme short position, the speculators, basically at the October lows.
Yes.
Betting on a breakdown. That's awesome. All right. What are you saying look out for in this Bitcoin chart? Fonz, I'm going to send you this. Let's throw this chart up.
So we've had a few interesting arguments about the COT and Bitcoin, right? Is it valid for Bitcoin? Because, whatever. But what we found was, or what I'm finding, the data is not long enough for me to go ahead and test it and all that. But I still believe in the idea of when speculators are way too short, the market has a pretty good chance of going up. And when speculators are way too long, and you can see, I don't know if you have the chart up there, but earlier in the year, we were seeing speculators a little bit too long. And there were a couple, this was a few months ago, there were a couple moves higher in Bitcoin that got rejected. It tried to move up a couple times, came back, moved up, came back. And then we saw the speculators give up and actually start getting short. And then we had to move up, and then it followed through, right? And now they've been selling into that, right? So you can see like this move in sort of August, September, late August, early September, where the blues were way too long. And the market tried to move up a couple times on Bitcoin there, and it came right back down, right? It had a couple days where it was up like 1,000 points, 2,000 points, came right back down. And then you can see the blue guys ended up shorting because they must have gotten frustrated with that. And as soon as they started doing that and got short, that's when the moves up really started to work, right? And they're doing nothing but shorting into it now too, right? The yellow are the small speculators. I think with Bitcoin, it's not really that relevant because I've come to find out a small speculator in Bitcoin means a one lotter, whereas anything over one lot becomes a blue, a larger speculator. So I kind of think that the small speculators are useless there. But you can see the large specs, which is essentially everybody, are super short here, and the commercials are getting pretty long. So to me, that supports the fact that the market can go higher.
And the
Higher
blue
price-
are the large speculators?
Yeah.
The blue.
Yeah.
So what you can really do here, based on all of what we've talked about, you can get long Bitcoin, short gold. Probably ends up being a great trade, and clearly for the last few weeks has been a great trade.
Love that. So Bitcoin, the large specs have not been this short since what, June? Late June, it looks like.
The large speculators haven't been this short going in this whole chart. I think this whole chart is a year and a half. I can go back and look longer, but at least for this year and a half, this is the shortest that the large speculators have been.
Are you gleaning any insights from large versus small in other markets?
So, when I'm going to make a trade, if I'm going to get long, I like to see the large and the small speculators super short, right? What I found is that the small speculators clearly are the worst over time. So you want to fade them. But when you add in the large speculators as well, it adds a lot of value as well. So I like them to be lined up on one side together, super short, before I want to get long.
Got it.
But of course, you don't know. There's no way to know. Like on this chart, for example, the large specs are as short as they've been, but you don't know if that will be larger, next month, right?
Correct.
So, right.
That's absolutely correct. You don't know. It's just an odds play. I mean, this is kind of rare on this one in that they've been selling in. Usually the market will be going down and the speculators will be selling. Most people are trend followers, right? Market will go going up and the speculators will be buying. In this case, I mean, look what Bitcoin's done, and they're just selling into it, right? So it becomes, to me, at this point, a trend trade, but a nice trend trade, because you still have a lot of people that can buy the stuff back. And people will argue that, the futures are only a small part of the overall market, and that this isn't relevant and all that. And I've quite frankly heard that my whole life. I've heard that with currencies my entire life, that the currency futures are such a small part of the currency market that why would it be relevant? And I mean, all I can say is currencies have been some of the best trades that I've had over time. So I don't really want to go through the philosophical argument. If it works, it works,
Were you doing this work during the last cycle? So last time Bitcoin and crypto markets were on an insane run, late 2020, early 21. Do you know anything about the positioning then? I wonder if
I don't even know when they started the futures in Bitcoin.
I think
it was right at the peak.
Right at the peak, right. There you go.
Because I remember talking to the guy that handled product at CME Group, and he said, why do you think that happened? Why do you think it peaked as soon as we came out with futures? Because all of a sudden there was a vehicle to short it.
Because that's how shit works.
Yeah.
By the time CME gets around to coming out with something that everybody would want, it's a day late, $1 short. I would say that's what it is.
Well, no, SIBO had it too, right?
Oh, did they? I don't know. I don't trade Bitcoin futures.
Okay.
And that's because there's not enough data for me to really test this stuff. But as we're going, I am paying attention and watching it, and I do mention it quite a bit because I know a lot of people are interested in Bitcoin.
I would think that the futures market for Bitcoin becomes a whole lot more sophisticated during this bull market because the institutions finally have a reason to be involved with these spot Bitcoin ETFs.
You would think so, yeah. I mean, as time goes on and as it matures, clearly it becomes more relevant, I would think.
Yeah. Talk a little bit about some intermarket stuff. Is there any, positioning that we should be paying attention to in the bond market, in treasuries, or dollar?
The COT on the bond market has been ruined by these people that are doing this basis trade. The big hedge funds are doing massive basis trade in fixed income.
Okay, explain what you mean by that.
I wish I could, but essentially, they're taking these small pieces of getting long the cash market and shorting the futures market.
Okay.
And they're making 2 pennies doing that. And so they're doing it in huge size. It's a mathematical, horrible word, mathematical certainty, right? Until it's not, of course. But they've been doing that in massive size. And so it has screwed up the commitments of traders' data.
It's these high frequency players.
I don't think they're high frequency. I just think that they are able to mathematically lock in something there. Wow. And so they do it in huge size. Yep. Because look, these huge hedge funds have shown in the last few years that they have no ability to make money picking stocks long short. And right. they have fired a lot of their stock people. So they've gone back to sort of traditional hedge fund stuff, like picking up 2 pennies on a basis trade and leveraging that 1,000 times, right? And that's what they're doing, and so it's kind of has screwed up the COT for the bonds. We do see that if you look inside of just trend followers, you look at some of these trend following ETFs and whatnot that have to show their positions every day because they're an ETF. They have been massively short and started to get massively short bonds clearly in the second half of this year, and now they got caught. And they haven't really bought them back yet. They've started to buy some back, but they tend to be a little bit more long-term trend followers. So if you look at the long-term chart on bonds, there's quite a ways to go before they'll really be able to get totally squeezed out there.
Yeah. Big move for bonds over the past, month and a half or so, but still these charts look just terrible. How about currencies? Anything in currencies that we should be paying attention to?
There was, we were riding I missed the whole bond move from the lows. I missed the whole stock move from the lows, but we were able to catch it in terms of, like the Swiss franc we caught, which just got out of, and when I say just got out of, I'm talking about last night got out of that because the COT went neutral on Friday.
You were long Swiss francs.
Long Swiss franc. Yeah. So I say it a lot, like a lot of times with this COT, like in 2008, for example, I did not catch the stock short in 2008 based on COT. I did not catch the bond long in 2008. And people think those were like the 2 big trades in 2008. But the truth is I did make money in 2008 because I caught some other shit short. I think it was energy I caught short and some risk assets like that, the COT. So it's like as a matrix, it can really help. You know what I mean? It may not catch every individual trade. In fact, I can guarantee you it doesn't catch every individual trade, right? But as a matrix, who gives a crap? When I look back at my 2008 returns, hey, they were positive. That's all anybody cares about. Did I do it short stocks? Did I do it long bonds? No. But, these things are all correlated anyway. What's the difference between short this or short that, right? And that's my point, like with the Swiss here. Didn't catch the stock move, didn't catch the bond move, but did catch it in the Swiss. Okay. Who cares? No one's asking me where I made money as long as I make money, right?
Money's money. How about energy? Let's do energy before we let you go here. When I look at some of these charts, we were just talking about it before you came on. Vulnerable.
Energy is incredible. The most incredible COT chart right now is the unleaded gas chart, where for whatever reason, the speculators have been buying it this entire way down. Unleaded gas is down like 35%. And normally these would be trend followers and they should be selling into that. And all they've done is buy it. This is the longest the speculators have been in unleaded gas in like, I don't even know how long. Now they have been selling crude as they should be, right? They haven't gotten massively short crude, but they have been getting out slowly of the longs in crude. But if I were to be long crude, I would be short unleaded gas against it because the positioning in unleaded gas is just ridiculous.
Ridiculous in a bearish way.
Yes.
And how about like RBOB?
Well, that is RBOB, yeah.
Oh, that's unleaded. Got it. Yeah. That chart looks like it's just ready to fall off a cliff.
Well, there ain't. I'm telling you, there ain't no support in positioning basis. That's for sure. Because all they've done is buy it. So God forbid these guys have to actually get out of these longs at some point. You know, there's going to be hell to pay.
Yeah, this thing could collapse, and you would think that the entire energy complex would follow, because there's a lot of similar looking tops in the stocks, energy stocks.
I mean, you would have to think that if unleaded gas is going to drop 20%, crude oil is probably not going up. I think it's a decent long short there. They haven't gotten massively short crude, but they've been selling it, and they're at their longest, the least long they've been all year. But yeah, I wouldn't be looking to be naked short energy here by any means. Which, mark that down. That'll be the low tick right there. But based on what I look at, which doesn't always work, I wouldn't look to be long energy. And a big part of this stuff is, I say a lot with the COT, it's not the greatest predictor of markets necessarily, but it is a great risk manager. It keeps you out of a lot of things, you know. Right. We had a lot of people that were telling me that they, you know, people love to short the stock market. They would have been shorting like the Dow, for example, this entire way up, and the COT at least kept them out of doing that, right? Because as we saw before, they were so short COT, and it's similar with energy here. You don't necessarily have to short it, you know what I mean? But at least it's keeping you from buying it, which has been just a terrible idea, you know. Obviously,
that's a great point.
So Bitcoin to the moon. Jason Shapiro, you heard it here on the morning show.
All right, man. Good talking to you guys.
Thanks a lot, Jason.
All right,
guys, if you want more Jason's thoughts, follow him on Twitter. His handle is up on the screen the whole time. It's also in the description below on YouTube. So check it out.
Great stuff.
Yeah, that was good.
Especially
smart guy.
To just hear that data that, you know, if you throw up our CO2 report, listen, we're looking at this stuff, but maybe not weighing it as much as somebody like Jason. So to take what we're seeing with price, like, it's just so interesting what he's saying about gasoline, right? And the bearish positioning there, with the chart looking the way it does. When you compare the price with this sentiment and positioning data, I think it's a really powerful combination. It's awesome. Yeah, we do this every Fridays.
I know a couple other contrarians who are kind of really starting to lick their chops over the energy sector right now. So there's something going on there.
It's just right on the ledge there. Can we get a chart of this gasoline? Did I tweet?
And you know, Steve, didn't gasoline kind of kick off the move for the energy complex this summer?
The move lower?
The move higher.
I don't know. I really don't know, Pat. I haven't liked energy for a long time. Here, just throw up this, I'm sorry, trading view chart. Here it is. We've talked so much about this now in these tops. This is exactly what I mean. It's in the chat. Fonz, just get that up there. I mean, this is a consolidation that coming off of those 2020 lows. I mean, energy and energy futures like gasoline absolutely ripped. You can see when inflation really peaked last summer, right? And that blow off high from June of 2022. Call it a head and shoulders, call it a top. Either way, if this breaks these range lows, and it is a range between, I don't know, 188 and 2, but if those range lows go, that is as, you know, massive as a top as they come. And it indicates lower. How much lower? I don't know, but Exxon's following, Chevron's following, Oxy's completing that top. You would think crude oil's falling. I don't know. I don't think energy is going to be the place to be in 2024, but we'll have to wait and see.
You know, I agree with all that, Steve, but you also made a really good point. If it does scoop and score here, if it is that failed top, oh boy.
And thank God we get to be technicians, right? Because I'm sitting here saying, boy, is this vulnerable. You got to stay away. If these end up being failed tops, we'll be out here in 3 or 4 weeks probably saying, all right, let's trade these energy ranges back to the upper bounds, right? So absolutely. We'll have to wait and see. You guys want to chat amongst yourselves? I'll go heat up my
coffee. Well, there's a couple more headlines I wanted to cover here. We had another M&A deal this morning. Holysys, HOLI is your ticker. It's an automation company. They're getting taken private for $26.50, which is $2 or so away from the all-time high. So HOLI going off the board. And then I had a few other non-M&A headlines. The first is for Strazza here. NVIDIA is talking about investing more and setting up a production base in Vietnam.
Oh,
You saw that, I'm sure. Yeah.
Hey.
So
expect more of that from companies all over the world. That's the place to be right now. Nobody wants to be in China, in these problem countries. Vietnam is a very, very attractive alternative for manufacturing.
Makes sense.
Yeah, it makes total sense. It's politically neutral, right? Yeah, not a problem country. To use Strauss's words.
China just keeps losing. They just keep losing, and these things. I mean, these are big hits. To have manufacturing just fleeing your country, nobody wants to be there. Nobody wants to do business with them. Nobody wants to do business there within those borders. It's a total disaster. And good for Vietnam because they stand to benefit a lot.
China has a manipulated economy, and they still have deflation. So I don't know. I don't know what to do about that.
It's a good point.
I'm not really sure how you look. Deflation. I'm no economist, but I do know that deflation is a hard problem to fix. Okay. So
I wish we had asked Jason about China because that one is also getting interesting, kind of from a contrarian point of view. You got that downgrade last week, but I say that, and it's also been interesting from a contrarian point of view for a while. I mean,
like a decade?
Yeah. I mean, like a lot of those Chinese internet stocks, they did well right out of COVID.
They did,
with all the growth stocks and all that, but those were actually, I feel like K-Web was one of the first like growthier areas of the market to peak around the same time as ARK, and from there it was yeah.
Look, the thesis on China was always, to me, it was always like a demographics play, right? But when you have a manipulated economy, like basically, and when you have a government that is willing to just at any given moment just like kneecap their own industries just for the hell of it, then it's like, then what even is the point of? I mean, what's the point of investing there? I just don't see it.
Did they ever find Jack Ma?
Yes, they found
remember
him.
when he randomly went missing?
He's been found. That was like a year and a half ago, man. It was like 2 years ago.
I'm glad he's okay.
Yeah,
I was a little worried.
Yeah. Okay, and Jason, yeah, there is no COT data on Chinese stocks, probably for
yes,
probably for good reason.
Excellent point.
Okay, one more headline I have here: Paramount, PARA, sticking with the M&A theme of the morning. The Sherry Redstone, who owns a controlling stake in that company, she's the chair of the parent company of the parent company of Paramount. It's called National Amusements. She's in talks, thinking about selling her stake in Paramount. They've been deciding what to do with this for a long time. So that would be the streaming. That would be the movie studio, and also the streaming platform and all the IP that goes with that. So that's why Paramount is up this morning. Last I checked, it's about 15%. I think it's more though now. Just on talks that they may they may get sold to a private equity firm. So we don't have a price, nothing confirmed, just rumors and speculation. Okay, let's talk about what.
Don't compare the United States capital market system with China. Don't make me school you, Wavy. Crazy talk. Get out of here with that.
Oh boy.
Yeah, man. It's apples and fish. All right. Let's talk about the NASDAQ reconstitution. We talk a lot about, or we make fun of the Dow a lot. The S&P does their thing every year, but so does the NASDAQ. Right. Once a year, they take a good hard gander at their indexes. The
6% turnover. 6% turnover this year.
6% turnover. Yeah, a lot of turnover. So here's what's out. Effective the 18th, whatever day that is. Effective the 18th. Who's out? Lucid, you're out. Lucid Energy. eBay.
Lucid was in the NASDAQ 100.
I think it was been there for, it may be in there for like a year or two. Not that long. eBay, you're gone.
All right.
Align, ALGN, you're out. Enphase, you're gone. Speaking of China, JD, you're done. And
wow,
Zoom.
Enphase. What an
and
Zoom.
Some big names.
Zoom was probably added during the pandemic boom, right? I would imagine.
Yeah.
Shortly thereafter.
Yeah.
And what a bad couple of weeks it has been for Enphase.
Oh my god!
Literally got the boot from both of the big indexes.
Both the indexes. Yeah.
These solar stocks remain in deep trouble, I think.
Steve, you and I talk about this on CRL all the time. These stocks that just trend higher, and those are the hardest to get into, the ones that, barely correct. This was one of those. And then when it does finally correct, it's like, whew, man, just absolutely taken to the woodshed.
Okay, so just to recap: Lucid, eBay, Align, Enphase, JD, Zoom. You're out. Who's in?
Who's in?
CDW. Okay,
so I'm shocked that they weren't already in. Great, so that's
no. So we're getting a little more diversified here. Okay, CDW, Coca-Cola Euro Pacific Partners, CCEP is your ticker on that one.
I don't like it when they add stocks that are blatantly not growth to this index because it ruins the information that I'm getting from the index.
We're getting more. Well, you better brace yourself because I got some other ones. Actually, no, the rest of these are all tech. So DoorDash, you're in. MongoDB's in.
Oh, good.
Roper, ROP, and Splunk. Wait, Splunk?
Mm-hmm.
Wait.
Splunk's been in there before. Aren't they
Splunk? Wait.
Takeover right now?
Yeah, I was just going to say, aren't they going off the...
All right. Well, I don't know why you would add a stock that's about to be gone because then you're going to just have to add somebody new anyway.
Cisco. Cisco's buying Splunk.
Yeah. Okay. So that's interesting. Roper's a good one. I'm a big fan of MongoDB. This is one of these really, really growthy names with a nice base in place.
What is MongoDB really? That one pops up all the time.
Cyber.
Package software.
I don't know. Yeah, I really don't know.
Enterprise software. Yeah. And then CDW, I mean, these business support services, it's really just a payroll processor. They're just such solid businesses. JC comes on here and talks about like the insurance companies, like what good businesses they are. I would throw these payroll processors into that same category. I mean, these guys just print money. Look at those charts. Zoom out, HX, ADP, CDW. I had a good buddy who worked at CDW.
Yeah, so CDW and Coca-Cola Euro Pacific Partners are the non-tech names going in. So we had basically 6 tech names, 5 tech names and a solar name out. 5 growth and a solar, maybe 6 growth. The solar is growth too. So.
And one hole just nailed it. The solar, it's a rate story. I mean, these companies don't work in high interest rate environment. They need to borrow aggressively. They're constantly raising, and people aren't buying these products and financing them when they're going to pay a double-digit interest rate to install solar panels in their house. These are big projects. So rates just crush these companies in so many different ways. They also crush them just from a valuation perspective. These are very, very, very long duration equities where you're discounting cash flows from 10 years from now. And if you're discounting those cash flows back at a higher rate, they're just simply worth less today. That would mean a lower stock price. So
it hurts the companies that have to borrow the most. That's a universal rule. And a lot of the larger solar names like Enphase have had to borrow the most to fund their growth.
Which is why, Spencer, these biotechs are really, really up to something here, right? Because they fall into that category too, as just chronic capital raisers.
I know, but there appears to be a bit of a feeding frenzy going on right now.
I bought a biotech last week.
What do you mean by that, Spence? By feeding frenzy?
There's been like a huge pickup in M&A in the last couple of weeks in biotech, and I think everyone, and it's not just weight loss stuff. It's not just like that. It's other stuff too, right? So there's people have cash and they are spending, right? Companies are spending, they are buying. So maybe they're buying at a discount and maybe they're bargain hunting, but there's definitely some fish swimming around in biotech land, no doubt.
I've been fishing in these ponds past few weeks. I'm looking through these genomic stocks. Some are. Did you see that action in CRISPR last week?
Oh well, we just got a thing on Friday, right? Right. The first approval for a gene editing drug. Didn't that happen on Friday?
Waiting a decade for this. Actually, really 2 decades. CRISPR is the brainchild of the what was it? The Human Genome Project.
Yeah, the gene sequencing.
From literally the late 90s. I don't know.
Yeah, I remember reading about that in like elementary school.
Yeah.
Yeah.
No, that's right. It was a really big deal.
Yeah.
I root for these genomic stocks. I think to root for this group of stocks is just being bullish humanity, right? And rooting for health. I think the innovations that these guys are going to unleash over the next decade or so are just going to be absolutely mind-blowing. And probably help a lot of us to live a lot longer, which is great. Everybody's all for that. So good for these stocks. This is one of those groups of stocks that like you could feel good about investing in. You don't have to buy like an ESG fund. But really, you know?
No, you're absolutely right.
Well, you can feel good in the sense that you're investing in the future. You may not feel good in the sense of your account, your account balance, but you know.
I'll throw it out there. I bought Twist.
But to his point, like, you know, you can get washed in some of these other names that were packaged as green and environmentally friendly, all that.
Solar.
Right.
All right, I'm going to throw up the one that I bought. We're going to talk about it.
How small or how
Steve,
I don't know.
At some point, I want to ask you about the GameStop and Ryan Cohen thing.
It's crazy, man. Nobody wanted to talk to me about it last
Dude,
week.
I want to talk to you about this.
I know you have a ton to say about that. So, and I'm very curious to hear.
I don't know how more people aren't just like ripping their hair out talking about this because it's
that usually ends well, right? Giving the CEO just a blank check.
I have gone down pretty deep down the rabbit hole. Pretty deep down.
What'd you find?
The meme stock rabbit hole. Just total confusion and total delusion. Right. I'm out of I went down there kind of like a few months ago, just sort of for my own curiosity's sake, and it is you know who's connected to this somehow is Pulte Holmes. Do you know that?
What?
I don't want to get into it. I shouldn't have said anything.
No, come on, cat's out of the bag.
Okay. All right. So this is the one that you bought, right? Last week.
Yeah, this is Twist.
Okay.
I'm jumping this breakout. I think we get it. I'll add more on the breakout. I was just trying to jump this little flag pattern. I really liked the action just last week. This one was strong. Bios were selling off. I think it was Friday. This one was just wicking higher. I really like it. Really like this a lot.
Yeah.
And this is a genomics play for sure.
I've never heard of this one, but it looks just like any of the ARK stocks. Could I pull up a chart?
Yeah.
So
Hell yeah. You better.
I think it's the last one on in the slide deck. So this one. So
sweet.
These are the 3 ARK ETFs. That one in the red, that is the genomics ETF. You can see the second holding in there is CRISPR, one of the ones we were just talking about. But this is kind of like the 3 different stages of some of these bases right now. You have genomics just put in a fail breakdown, right? That's kind of the worst of the group, but it's still nice. You have ARK, the flagship fund. That one is trying to break out. And then you have ARKW, which is already breaking out. Breakout's already underway. So, and Steve, I didn't even put in like ARK F. They got a couple other ones, but ARK F looks great too.
Okay, so what do we do with this information? Is it as simple as ARKW, green light, path of least resistance is higher, ARK, the flagship, yellow light, just about there, right? But haven't resolved the base yet. And then ARKG, is that a red light, or how do you?
I would say that's a green light. You know.
Okay.
Which one would you want to play? Would you rather play that fail breakdown, or would you try?
They're different trades, right? For me, I think the highest probability trade here is ARKW. Okay. But ARKG, I mean, if you're buying that scoop and score, I think especially in this kind of market, right, where risk appetite is really just blowing out right now, these are the kinds of stocks that are being bid up. You could trade that fail, get in right here at the lower bounds, and trade it back to the upper bounds. What you have to realize, though, is you're still trading a range. And until that range resolves and it looks more like ARKW, you don't want to be in over longer time frames. ARK W, go buy with a 1-3 year time frame, right? New up underway, new bull market's just been born. ARK G, again, it could take some time. Maybe it's a great trade back to those range highs, but then you want to take your profits there and see how it reacts. Different trades.
And I was just really surprised at those holdings in ARK W. I mean, a lot of that crypto exposure,
So Coin has blown up as their biggest holding.
Oh, okay. So as it's gone up, it's become a bigger,
Yeah, and Pat, I feel like you'd have to check back on this every month or so because they're so damn active that this has probably changed a lot.
You're saying ARK is?
Yeah.
All of these charts, just go down the list. Coinbase, we all know how that one looks. Amazing. Roku, just now completing a base. It looks pretty damn good. GBTC, that's just Bitcoin. Looks awesome. Square, throw that one out. Work to do. Path. You look at a chart of Path. Beautiful reversal pattern. New uptrend is underway. So all of these charts individually look great. I mean, look at Path. Oh, my God.
Yeah, what is Path? That was the only one I didn't recognize on there.
Package software.
UiPath, right? I don't know.
Of course, package software.
Automate business processes. Oh, it's one of those productivity softwares.
Is it? All right, whatever. I like what Steve said. Highest probability is the one on the right, but the highest profit potential is the one on the left.
Yeah.
I don't know how I feel about the one in the middle. Probably neutral on that one.
Give it time. ARK K should look like ARK W very soon, right?
Okay.
Yes.
We'll see.
Should. We'll see.
And then hopefully in three months, ARK G will look like ARK K is now. So
another
that progression.
And Pat, here's why ARK W is the leader. Crypto.
I was gonna say, yeah,
that's a crypto fund. That's a Bitcoin.
Now, do you know what ARK F looks like in terms of the holdings? I mean, is that as exposed to crypto as ARK W? I would have expected the fintech innovation ETF to.
ARK F, you got Coinbase, CrowdStrike, Roblox, Stone, Path, Square. There's so much overlap. That's why they all look similar.
Yeah.
Palantir, Mercado Libre, Shopify. So I love that. We got Robinhood and Coinbase in there. And let's talk about Robinhood. You also have NVIDIA in there, Intuit, SoFi. Does SoFi do the crypto, Spencer? They offer crypto?
No. SoFi is becoming a bank, so they had to. They're actually stopping their crypto stuff. They have it, and they're stopping it as of I think like next month, this month, and next month.
Oh, wow.
They have to. They're a bank. They're like a bank. They're becoming. They have a charter. They have to. Good. They can't be doing this stuff. So
good for them. Yeah. So let's talk about
Pat. Are you okay? Is there an alarm going off in the building?
No. I think that's a trash truck.
I know. Before that, I heard an alarm. That wasn't you.
No, not right. This time. No,
never.
Look at that. Right. And we saw the sunrise live. Yeah. Patrick's back.
Oh, that's been the best part of my day is watching the sunrise through Pat's windows.
Beautiful San Diego studio view. I mean, what a treat to work in this lovely, lovely studio that we have, huh?
It is nice.
Yeah. Okay. Robinhood. If you have to drop press releases reminding people that you do crypto things and that crypto volumes are up, and if your CEO has to come on CNBC and do the whole circuit and come on all the networks and talk about how you're a crypto company, you do crypto trading, and crypto is good right now to juice your stock and get a little move higher in a market where everything's moving higher, it's not a good sign. Not a good sign. You don't see Brian Armstrong coming out and saying, hey, everybody, we make more money when more people are trading crypto. You don't see Coinbase dropping a press release right now bragging about how crypto volumes are up. They don't need to. Okay?
Did they do that this morning?
Robinhood's running around dropping press releases, trying to make it seem like crypto is a bigger part of their business than it actually is. Why would you trade crypto on Robinhood? Why?
You know what I'm very curious about is earlier this year they launched Roth IRA ability. I would love to know how much money they have in retirement accounts, and if it's over under $500,000,
I haven't seen the new Coinbase commercials. Drop a link. You got it.
Man, do you remember that Super Bowl Coinbase commercial like a few years ago? It was just the QR code. That was great.
Everybody remembers that. It was the best commercial of all time. I scanned the code and I couldn't get the site. Literally crashed. Like,
Put up One Hole's comment. That's great. They give you confetti. That's one of those platforms where they do
they don't.
Logical thing. Perlman
come
on and talk about this. It's like it like hits on your reward.
It's like a slot machine. Yeah.
Yeah. The ding ding ding. Yes, exactly like a slot machine. So that's what Robinhood is. That's what Robinhood is. It's a platform that shoots confetti across your screen when you hit buy. That the CEO comes on and reminds people, hey, we do crypto things, buy our stock, right? It's a company that has to drop a press release reminding you that maybe they actually had a good quarter for once. I don't like it. I think they eventually get bought out by one of the big brokers, but probably lower than what the stock is today. We'll see.
Oh shit, I didn't know that, Blake. Robinhood does a 2% match?
Well, what?
Okay. The more you know. All right.
Most people's employers don't even do a match anymore. They got this safe harbor stuff and all these different.
No, a 2% match on the IRA. That's not nothing.
But
Okay. Moving on. Do you guys want to hear about how Pulte Group is
yes, I would love to.
And AMC. Okay, so it's not GameStop. It's meme stocks more broadly, which is an umbrella. You need to include AMC. You have to include Bed Bath & Beyond, and I'm mostly referring to Bed Bath & Beyond in this context.
Rest in peace.
But rest in peace. Right. Bill Pulte Jr. He is one of the 14 grandchildren of William Pulte, the founder of Pulte Homes.
Is this the guy with like 1 million followers on Twitter?
This is that guy.
Like millions.
Yes.
He just gives away money.
Yeah, he's given away a little bit, but he's made a lot more off this movement. He's a total charlatan. Okay, so this guy, William Pulte Jr. When his grandpa died, Bill Pulte Jr., the grandson, was on the board of directors at Pulte Homes. Okay, that was I guess it happened maybe before his grandpa died or after, but he was on the board of directors. He got thrown off the board. He got kicked out. Okay, because he's kind of crazy. Okay, so he got kicked off the board, and he's been on this like movement, this crusade to get back on the board of Pulte Group since he got thrown off I think 2 or 3 years ago, and to drum up support to get back on the board, he has sort of anointed himself as like king of the apes regarding Bed Bath & Beyond. He's gotten all these and Bed Bath & Beyond and also a little bit GameStop, but mostly Bed Bath.
He's like Ryan Cohen.
He's not like Ryan Cohen. Ryan Cohen actually has a shit ton of money, and by all accounts, seems to be a pretty smart guy. Okay. Bill Pulte Jr. seems like a total idiot.
I gotta look this guy up. He got kicked. Go ahead.
Thank you. The chat's taking up for me. No. He basically has sort of co-opted the ape movement for his own benefit to try to get himself to get the current CEO of Pulte Group fired. The stock is at an all-time high, and to get him appointed back as CEO of the company when he was CEO.
He was formerly the CEO.
No, he was formerly just on the board. He was a director.
Wait, is his handle just Pulte?
It might be. I don't know. It might be. Sorry. Allegedly an idiot. Thank you, Sam.
How old is he?
I think he's in his 40s, maybe.
Huh.
Yeah. He's a grandson of the founder. The founder, I think, died a couple years ago when he was in his 90s or 80s. So.
And you found this just digging around about the Ryan Cohen stuff.
Yeah. Well, because it starts with GameStop. Because GameStop is the gateway drug of meme stocks, and then you end up reading about Bed Bath & Beyond and Pulte, and you're like, holy shit, how did I even get here?
There is no band of shareholders that is more ridiculous than GameStop. And listen, I'm all for.
No, there are the Bed Bath people are more ridiculous. I
said a couple critical things about GameStop on the internet last week.
Oh boy!
Oh my God, these people are nuts.
You just look outside your window; they're just waiting for you.
So Pulte Homes, Pulte Group, the company is so annoyed with this guy, Bill Pulte, that they had to, if you go to their website, or maybe I think it's the website for their foundation, they have a pop-up on the website that says, we are not in any way affiliated with this other guy. He has our name. We support his ability to do what he wants with that, but we are not him. He is not us. We are not affiliated at all. Yeah, pretty crazy. Anyway, that was a total tangent. Let's talk about Hot Corner, because we had a couple today, right?
Hit it.
Yeah. All right. I got to find my bumper first. I caught myself off guard with that one.
So hot right now.
So, still no Warren Buffett filing. We are looking out for him every day. At this point, I don't think they're coming. But we do have another one in the oil and gas space. This is Blackstone Minerals LP. It's been on our list plenty of times before. This is, I think, one of those CEO, chairman, founders who just keeps gobbling up shares. That's all well and good. We've talked about Blackstone over and over and over again in our Hot Corner column. Throw up the Blackstone chart. Just like most things in energy right now, it's a total mess, right? They came so strong off those 2020 lows, looked great, and just a really long-form consolidation in all these things. Oxy is probably the best example. It's been going sideways for like almost 3 years now. It's crazy. So here's Blackstone. You have a very, very clear level of interest. We've been staying away from it until we get that breakout. It continues to be opportunity cost. In a market where so many things are trending higher and offering great opportunities on the long side, to be in something like this that's stuck sideways below a significant amount of overhead supply is absolutely crazy. So maybe one day things change here. We do eventually get some sort of nice upside resolution above 1950. We're buying this thing hand over fist. Then we'll be in an environment where, like I said, those tops in energy are failing, and energy is a group that we like right now. We'll see it, right? We'll see the charts. We'll see the signs all over, and then we'll know, okay, so a stock like BSM, it's time. You have to be patient, though, right? Keep in mind that the underlying trend, or the structural trend, was higher coming into this consolidation. I think that bodes well for an eventual upside resolution, but these things can take a lot of time. And it seems like we're still very much in a digestive phase where these things are just chopping sideways, really, really messy. BSM is one of them. I'm going to keep it on a radar because we do love the insider activity in it. It's been going on pretty much all year. But again, 1950, until we get that resolution, this is just opportunity cost. What do you guys think? You out here buying energy?
I mean, like you said, man, there's so many other good setups out there, so many other good sectors. It's just,
I mean, you talked me out of it. How could I? You talked me out of it.
Beautiful dividend yield. And there's a great dividend in a lot of these energy stocks.
11% each.
It's an LP, though. So you're getting a K1, and that really sucks.
I don't want that.
Yeah, nobody wants that. You know, I bought, as an update, I bought that coal.
Oh, yeah.
ARLP. I'm just about done with it. Again. And I came on here and said, I'm breaking my own rule. I'm buying a stock with a, double-digit dividend yield. I'm probably going to regret it. Probably a trap, but I was thinking coal is in a bull market. These coal stocks are just printing money. They're doing so awesome. It was one I wanted to take a stab at. I'm already down like 10, 15% on the position. That dividend yield is just not going to make up for it when stock's falling like that. So I'm about this close to cutting out of it, just as an update, because I know I talked about it on here a couple months ago when I got in. And that's the problem with these high dividend stocks. A lot of times you get in, you love that juicy yield. It sounds so good. And then the price appreciation or price depreciation just kills you. So I fell into the trap again, guys. Listen, we're all human here. We all have a good divvy. But
they're called dividend traps for a reason, right?
Yeah. So also, just throw it up real quick. Let's look at this Nordstrom options flow that I mentioned earlier when we were talking about Macy's. Throw up the table, Fonz. I did. I taught you not to chase yield, Mike. I didn't even follow. Listen, do as I say, not as I do. Nordstrom. So they went to the December 15th, like a week out. This is just classic. The news is coming. You buy weekly calls. You want that juice. What was the strike on these? 17. What's the stock at? So 17 strike call. I mean, it probably got a huge jump today. I'll bet they're selling into this move right now. And opened above 17 just a few minutes ago. So interesting activity. That's all I got.
All right. Got some good stuff in the hot corner today. Pat, you want to talk about chart report real fast?
Yeah, sure. I got one more chart in the slide deck. It's, I think, second to last. But we'll just go over that one real quick, and then we'll hit the chart report.
All right. Yeah, what do you got?
But Strazza, I think you'll like this one. So the extended market, right? So this is the ticker is VXF. It's based on something called the completion index, which is essentially everything that's not S&P 500. So basically a basket of like 3,000 stocks, everything that's not large cap S&P 500. That thing, it didn't quite break out to a 52-week high, but it's knocking on the door. Looks better than the Russell 2000 and a lot of those other breadth type indexes. So this one, I mean, the caption, even the rejects are rallying. It's not just the S&P 500. It's not just 7 stocks. Right. We've seen a really good improvement in breadth lately.
So Pat, I use like the Russell 2000 and the value line to give myself a good read on what the average stock or what most stocks are doing. Is this any different? Isn't this the same? It's giving you the same information.
It's pretty much the same. It's just a kind of a different look of that. But I think looking at all those and kind of, like you said, they're going to tell you a similar thing. Yep. But it's nice to see them kind of all in agreement. And this one, like I said, it looks even better than those other ones. So kind of begs the question: are those going to improve as well? And I really like that relative performance on the bottom there. It's kind of like a fail breakdown there. So if the extended market, if everything else starts outperforming the S&P, that's a pretty bullish environment.
If this base resolves higher, does it make sense to take that one step further and say the base in the Russell 2000 also probably resolves higher?
Yeah, I would probably say so. And like you said, it's very similar index, right?
I like it. I love this index. I think Todd Sohn is a big fan of it too, right? This is a Todd index. Yeah.
That's a Todd index.
Shout out for Tigas. Good stuff, Pat. I love the ARK charts.
I want to mention real fast that the charts that Pat has showed today, so this one and then the ARK thing, those are charts that Pat sends out every single week to his paying subscribers. It's called the top 10. I'm going to drop the link in the chat right now for how to get access to that. That one chart deck, the top 10 is part of what we call what Pat calls chart report private access. It's one of the 3 scans Pat sends out every week. There is the top 10, there's the buzz, and there's the heat check. And so the link is on the screen. The link is in the chat. If you want to get those reports, they go out every Sunday, Pat? Is that right? The top
10? Sunday, basically just a look at the week ahead. Like you mentioned, it's one of 3 reports we do. But I really like this one, just the act of putting it together and thinking about what we'll be looking at in the week ahead kind of make sure that your eye's in the right place.
And this is the same kind of top 10 report that some of you might have been used to getting from All-Star Charts. Patty just took it and ran with it, and what an amazing job you're doing.
Really, it's tremendous. It's tremendously well done, and I feel like it's in ways it can be like the forgotten child of the 3 because it comes out over the weekend, Sunday night. But it is actually my favorite of the 3 that Pat does for his members. So yeah. All right.
Yes.
Chart report first, real fast, and then recess.
All right, so we're looking at the Friday report.
Yeah, I like that. I like this one. This was my favorite.
There's just a 6-week week winning streak. Oh, yeah, so that's the longest since I think 2018 or 2019. And then this week we're trying for if we make it to 7 weeks, that's the longest since 2017. And, winning streaks are kind of trivial, but it is kind of a display of strength. And more importantly, we broke those July highs, haven't quite broken or really decisively broken out above 4,600. But if we break really, get follow through this week, then all-time highs. I mean, that's pretty much the next test.
There we go. All right, what was your favorite?
Oh, favorite one. That is tough to say. I'd have to take a look through mine.
Or at least what did you think was worthy of highlighting?
Mostly I think the indices really are just kind of telling a lot of the picture right now. So you can see a lot of those charts are the indices there. There was a little bit of talk about sentiment last week because, you saw a lot more bulls coming in lately, but not that much of an extreme there.
Here we go with the altcoins. All right.
Good. This one's good.
Oh, that one? Yeah.
Ooh.
Okay.
What's that?
This?
I wanted to talk about this for recess.
Oh, okay. We'll save it.
And yeah, it's getting that time of year again. We're going to hear an awful lot about year-end targets, Strategist 2024 price target, which, I mean,
you know what?
So
Sam, no, you know what? No, hold on though. Sam Rowe did. I get Sam Rowe's stuff. He made a very compelling argument in favor of sell-side analyst S&P 500 predictions, because basically someone has to do it, right? Is basically what it comes down to. It gives everyone kind of a benchmark, right? And it's a totally thankless job. And yes, they're almost always wrong. All of them are almost always wrong, but it gives everyone something to measure up against, and I think it's in a way kind of necessary. So,
no, I think that's a good take.
Yeah.
And whenever you hear it quoted, it's the average usually, and I don't think a lot of these people have tremendous conviction over these calls. Some probably do, but
and that was part of it. Is they don't even want to do it. They don't even want to do it.
Right.
They have to do it.
Yeah.
Yeah. Anyway, guys, get the chart report. It's free. It goes out every single day. The link is in the description in the show notes below on YouTube. Time for recess, and then we're gonna hop.
All right.
Find my recess bumper thingamajigger. Where are we at?
Throw up my altcoin chart.
The one I just had.
I can't stress this enough. It is just starting. It's been 2 long years. These things have been absolute garbage. Giant base is in place. It is now completing. This is an altcoin index that we created years and years ago. I know that they're no longer the top 10 largest, but we kept the index the same simply for the data, right? I'm not going to pull names in and out. Okay, this is our altcoin index. It looks like ARKW. It looks like any of these beautiful bases that we have been buying all year and have been rewarding us for doing so. If you're not in crypto yet, it's not too late. I know it already feels too late because these things are up 5-10% every day, it seems. Define your risk, know where you're in, know where you're out, know where you're wrong. A good place to define that out is if the base fails and rolls back over. There are a lot of good options beneath the surface. Go look at a Cardano, look at a Solana, look at an Avalanche, stick with the leaders. I think this thing is just getting started, and we're going to look back sometime next year and say, oh my, was that a good time to buy these cryptos? Everybody hates the space. Sentiment is ripe. You heard Jason Shapiro. Everyone's betting against it. The futures positioning, very, very, very bullish right now, and they're just climbing this wall of worry. Crypto assets are the hottest assets in the market right now. This is like very, very early inning stuff, and I think you want to add your exposure right now.
I think that's, that piece you mentioned about sentiment is so important. I think, when we were at these levels back in, 2021, 2022, this is where you started seeing celebrities come out endorsing it, putting crazy price targets on it. That's when you started seeing the frothy behavior. We're at those same prices now, and you're not seeing any of that, or not yet.
We're going back to that world, and you're right, Patrick. That will be very, very late inning stuff.
Right.
Start to see that. We're not even close. We're not even close. These trends will be tough to get into. Go back and look at the uptrends in 2020 and 2021 and do a little game. Ask yourself, where would I have entered this trade? Very tough, right? Ooh. So you want to buy these coils, you want to buy these bull flags, and you just want to get on board, because I think this bull market is going to put the 2020-21 bull market to shame, and the parties we are going to have in Miami, I am just so excited about. So
that's a fun game to play. When would I have bought? When would I have sold? I play that game quite a lot.
Ask yourself. Look
Steve,
at those.
Do you expect this to be crazier in terms of like percentage gain though? Like, because
I do.
Hasn't it kind of become less volatile over time?
You know, when I put that chart out with the crazy Ethereum price target, that was the biggest pushback I got. Well, every cycle the returns are less. Guess what? There's no hard and fast rule that every cycle the returns have to be less.
Yeah.
So I think maybe we surprise some people. Listen, there are going to be cryptos that enjoy far bigger gains than they have in any bull cycle before, and there are going to be cryptos that enjoy smaller gains than they have in bull markets in the past. What you need to do, focus on the early leaders. I think Solana and Avalanche are making it overwhelmingly clear that they are going to be the leaders of this new crypto bull cycle. So those are my two favorite. I own more of them than any other coins, and they continue to work. So yes, Rachel, the relative strength from Avalanche is absolutely ridiculous. Continues to stand out. You could say it looks even better than Solana.
And who knows? Maybe it'll be a coin that leads that we've never heard of, right? Maybe they could just.
It will most certainly be that. That's my
right. Exactly.
Right now, as I said, and guess what? I'm not a fundamental crypto person. The less I know about these fundamentals, the better. But we have some very smart friends, very, very smart friends. I was talking to on Friday, who said we own so much Solana, too much Solana. Talking about some of these crypto hedge funds.
Why does it seem like every fundamental crypto person loves Solana? Hasn't worked out for me, is all I'm saying.
I don't know, but I don't hate hearing that. You know?
Okay. All right. My recess is, look, I finished my bookshelf, guys. It only took me a month, but I got it done.
Looks great. The office looks great, Spencer.
Yeah, coming together. Good. And now I have my mixer and my soundboard unplugged in right next to me. I have to set that up this week. That's my homework, is to set all that up, and then it will have sounds. It'll be fun. Pat, you got anything?
Oh man. You know, I'm super late on this one, but I watched that movie Whiplash. It came out a few years ago, but that movie was awesome.
It's a good movie, man.
Meaning to watch it, but that was really good.
What is
it? It's a good movie.
It's about like who's that? J.K. Simmons, is that his name?
Yeah.
Yeah, it's about this kid who's in like drumming school, and it's like he's got like an insanely like strict teacher. But it's really good.
It's about the world of ultra competitive like music schools in New York, and the main character is a drummer at like basically like a Juilliard type of place, and his teacher is like psychotic. And it's about their psychotic manipulative relationship between the teacher and the student. It's very, very enjoyable. It's a very small film, indie film, made a shit ton of money. Anyway, great movie. Okay.
I watched the new Julia Roberts movie on Netflix, and it was just about as bad as I thought it would be.
Damn it! Oh my god, I'm so pissed you said that. The one with the Teslas all crashing, all that.
Yep.
Oh, it's bad.
I mean, I fell asleep.
Oh, man,
it was okay. I mean,
I really that looked really good.
My girlfriend liked it.
Okay, fine. All right, fine. Okay, look, we're done here. It's Mondays, so we've got the Flow Show with Strazza and Sean coming up at 11:30 a.m. Eastern Time. Stay tuned for that. Thanks to our guest today, Jason Shapiro. Thanks to Pat for hanging out. He'll be with us through Thursday, I hope.
Yeah.
If he would grace us with his presence, we'd love to have him. And look at that, the sun is up. For Patrick, it means it's time for us to go. So thanks for watching, everyone. Hit the like button, please, and thank you. And go make some money, all right?
Happy Monday, everybody.
Thank you, guys.
I can't take no loss. I don't even know what it costs. I hit the ground, then I go